let's kick it off where I started. Killer numbers, particularly when it comes to FICC. What visibility do you have now as we're in the fourth quarter?
Well, thank you, Alex. Happy to be on the show. As you said, we had a very strong quarter. It was actually broad-based across all three businesses. ISG continues to be a standout as we continue to see elevated activity levels, elevated volumes, and the first couple weeks of the quarter we continue to see a very constructive market. In terms of the future, we'll have to see, but we've seen very strong technicals. We've seen good liquidity. We've seen high levels of engagement. So assuming we have open and functioning markets and engaged clients, that generally bodes well for a good backdrop for our sales and trading business.
John, we're weeks away from an election here. How is that impacting how traders are engaging with the markets right now?
Well, again, I think whether it's an election, whether it's the virus, whether it's a debate around inflation or deflation or China-U.S. relations, our clients are looking for advice. Our bankers, our FAs are intensely engaged with our clients, and client dialogue and open and functioning markets creates activities. And again, I think we're very focused on our clients, very focused on risk managing, and looking forward to what the quarter holds.
Your peers have put in such strong numbers, but clearly it's not showing in any of the stocks yet. How much are people worried that these gains that we've seen in the markets up till this point will drop off after November?
Well, listen, I think a couple of things. One, people are generally focused on financial services as a levered bet on the economy. So I think the uncertainty around the economy plays into that. And as you just said, we've had record to date revenues and returns. That's on the back of 2018 and 2019 record years. So we've shown strong and consistent performance, but I think people are clearly focused on the outlook. We have a lot of risk events that I just talked about. And as these things tick through, if the markets stay constructive, I think you'll see continued good performance.
Jonathan, you mentioned their engaged clients. One thing we're watching very carefully is the outcome of the election. You lend to big companies and rich clients. How do you think their behavior could change if we were to see significantly higher taxes?
Well, again, we see significant amounts of liquidity with our client base, whether that's our institutional clients or our retail clients. Our retail clients currently have about 20% of their assets in liquid fixed income securities, short-term or cash. So I think our client base is reasonably conservative, but they are engaged. They have been deploying capital. I think if you look at the underlying fundamental economic picture around the globe, it's solid. So I think we're at the start of a new business cycle, and assuming that the economic growth can continue, I think that will drive earnings and that will drive a constructive market.
Jonathan, typically, I mean, if you rewind like 8 months ago, we would have said President Trump's going to be better for Wall Street than President Biden. That narrative has quickly changed in the last few months. And I wondered what your clients were thinking about a blue wave, that potential. You said that they have a good amount in liquid assets. I'm assuming that means they want to put it to work. How are they thinking about it?
Well, again, I think the best outcome is a quick outcome for the election. The markets don't like uncertainty. I think the blue wave is out there. I think that's partially priced into the market, and I think that's a function of whether regardless of the outcome of the election, I think the expectation is continued fiscal support. It's not a question of when, but it's a question. Excuse me. It's not a question of if. It's really a question of when and how big. Central banks around the world have been very supportive. Policymakers have been very supportive, and I think the markets, regardless of the outcome of the election, are expecting continued fiscal stimulus to help improve the economy.
John, one of my favorite statistics about Morgan Stanley is that it is the biggest prime brokerage on Wall Street. Given that, what are hedge funds doing in aggregate right now? Is the risk appetite on significantly? Are they looking to delever a little bit? Where do people stand?
Yeah, sure. As you mentioned, we have the largest PB business in the world. Our equities business is #1 in the world, and we have a pretty good sense of what investors are thinking about. Our balances in prime brokerage, they're about 10% below where they were in the first quarter, which was a record level. We have seen the long-short hedge fund community re-lever, so they're back to leverage that they saw in the first quarter. The people who haven't re-levered really is the quant funds. The volatility in the equity markets has prevented them from re-levering. They're about 10 or 15% below their level. So long-short hedge funds re-levered, quants haven't. The long-short hedge fund community doing quite well in this environment.
And here at Bloomberg, we love to talk about leverage, and your debt underwriting numbers were actually down on the year at a time where we've still seen capital raising pretty strong. What happened there?
Well, again, as I mentioned on our call, there was less event activity. We're not as big in some of the flow products as others. We rely on event activities and bespoke transactions. We've seen a really nice pickup in the leverage finance market recently, obviously on the back of sort of the increase in the announcements of M&A. We've seen a lot of sponsor activity, and so we would expect to see better results. Clearly, the investment grade issuance, which was just on a torrid pace, has slowed down a little bit, but still very active, and we we feel very good about that franchise.
Jonathan, the IPO market has been strong. You've benefited from that. How much of that was front run into the election? What does the calendar look like next year, do you think?
Well, the IPO pipeline is quite healthy, and it's quite healthy globally. It's really been focused on healthcare, tech, more growthy names. In the beginning of the year, at the early stages, we did a lot more rescue financing. Now it's really around growth and specific sectors. The pipeline is very healthy. The markets stay constructive. I would expect it to be continue to see really good IPO results there. Excuse me.
Jonathan, what about SPACs?
What about them?
Well, you said you're going to see.
They're another vehicle, just like an IPO product or a convert product. Obviously, there's been a significant increase in the volumes. It's not a big business overall. It's clearly it's clearly grown significantly over the last couple of years, but it's just another product.
So what about M&A here? We have seen Goldman come in yesterday and say significant backlog. Are you as constructive? Are you seeing CEOs wanting to come back with big deals through the end of this year? On our league tables at this point in time, you are number one.
Yeah, listen, I think we're seeing more confidence with CEOs. We're seeing high level of board engagement. The pace of announcements have clearly picked up. It's broad-based in terms of both sponsor activity as well as corporate activity, and our pipelines are quite healthy. I think people would like to do strategic transactions just like we've done them. I think other companies would like to do them as well. The pipeline is healthy, and the pace has accelerated here since August.
John, also, the last 3 years, as far as league tables go, Goldman was able to eke ahead of you in terms of deal volume. Do you think you can eke ahead this year and end on top?
Listen, we have one of the premier global integrated investment banks. It's a world-class franchise across all of the products, the M&A franchise, the equity capital markets franchise, fixed income. We're very confident in our abilities. We've been gaining share. We've been taking advantage of actually an increase in the wallet. Clearly, activity levels are high, and we're participating in that. So we feel very comfortable about our positions, and I'm really proud of our franchise.
Jonathan, you've just delivered the second highest profit ever. Given the background that we face at the moment, are you surprised by that, and is it sustainable?
Well, again, the future outlook, I think we're pretty constructive on. Markets are constructive. We feel good about our positions in our business, but I think it really gets down to sort of our unique business model. As I just said, we have a world-class integrated investment bank. We have the largest wealth and investment management business. That unique business model is very well positioned. We have limited exposure to net interest income, and we have limited credit exposure, which has really been a highlight for us. So our results have been quite strong, and I think that's driven by the business model and our positions.